The trade war between the United States and China has escalated. Tensions, simmering for years, have boiled over once again. This time, the stakes are even higher. In February 2025, the U.S. announced a new wave of tariffs. These tariffs target Chinese imports worth over $60 billion. Computer parts and electric vehicle components are directly in the crosshairs. China wasted no time in responding. Beijing countered with its own tariffs, targeting $35 billion worth of American goods. These retaliatory tariffs focused on key sectors of the U.S. economy. Soybeans, a major agricultural export, were hit hard. Energy, in the form of crude oil and liquefied natural gas, also faced significant tariffs. The automotive industry wasn't spared either. These tariffs represent more than just an economic squabble. They are carefully calculated moves in a high-stakes game of geopolitical chess. The U.S. aims to slow down China's technological rise and protect American jobs. China, in turn, is trying to exert its growing economic might and diminish U.S. influence on the world stage. This latest round of tariffs has rattled markets worldwide and cast a long shadow of uncertainty over the global economy. The repercussions are already being felt by businesses and consumers alike. The question now is, how far will this trade war escalate, and what will the ultimate cost be for both sides? The impact of China's retaliatory tariffs is being keenly felt across various sectors of the U.S. economy. American farmers are grappling with the consequences of China, once a major buyer of U.S. agricultural products, significantly reducing its purchases. Soybean farmers in particular have been hit hard. With a glut of unsold soybeans piling up, prices have plummeted, leaving farmers struggling to stay afloat. The energy sector is also feeling the heat. China, a major consumer of energy, has scaled back its imports of American crude oil and liquefied natural gas. This has forced U.S. energy companies to scramble for new markets, often at lower prices. The cancellation of lucrative contracts and stalled shipments have become commonplace, putting a serious dent in the profits of American energy giants. The situation is no less dire for American manufacturers. The tariffs imposed by China on components and raw materials have disrupted supply chains and increased production costs. Many businesses, already operating on thin margins, are finding it increasingly difficult to compete with foreign rivals. The fear is that these tariffs could lead to job losses and factory closures, particularly in manufacturing heartlands already grappling with economic uncertainty. The trade war has exposed the vulnerabilities of the U.S. economy, particularly its reliance on China as both a market and a supplier. The tariffs have highlighted the interconnectedness of the global economy and the ripple effect that trade disputes can have on businesses and consumers far removed from the original point of conflict. China holds a trump card in the ongoing trade war: rare earth minerals. These 17 elements are essential for a wide range of modern technologies, from smartphones and electric vehicles to wind turbines and military hardware. And China, it's important to note, controls a staggering 80% of the global supply of these critical resources. This dominance gives China significant leverage over the U.S. and other nations that rely heavily on rare earth minerals. In a calculated move to exert pressure, China has hinted at restricting the export of these materials. Such a move would send shockwaves through the global tech industry and could cripple the production of everything from iPhones to F-35 fighter jets. The U.S., acutely aware of its vulnerability, is scrambling to reduce its dependence on Chinese rare earth minerals. Efforts are underway to diversify supply chains, explore alternative sources of these minerals, and invest in domestic production. However, these measures will take time, and in the short term, the U.S. remains highly reliant on China for this critical resource. China's control over rare earth minerals highlights the strategic importance of securing access to critical raw materials. It also underscores the need for nations to diversify their supply chains and reduce their reliance on any single country, especially one with which they have an adversarial relationship. As the trade war with the U.S. intensifies, China is actively strengthening its economic ties with other nations. This strategic move aims to reduce China's reliance on the U.S. market and lessen the impact of American tariffs. At the same time, China is forging new partnerships and expanding its influence on the global stage. China has inked significant trade deals with countries like Brazil, Russia, and Mexico, all major players in their respective regions. These agreements encompass a wide range of goods and services, from agricultural products and energy resources to manufactured goods and technology. By diversifying its trade partners, China is creating a buffer against U.S. protectionism. Beyond trade deals, China is making significant investments in its domestic industries, particularly in sectors where it aims to compete directly with the U.S. Billions are being poured into semiconductor production, artificial intelligence research, and the rollout of 5G networks, all areas where the U.S. currently holds a technological edge. China's Belt and Road Initiative, a massive infrastructure development project spanning Asia, Africa, and Europe, is another key element of its global strategy. By financing and building ports, railways, and energy pipelines, China is creating new trade routes and expanding its economic and political influence across the globe. China's multi-pronged approach is reshaping the global economic landscape. By forging new partnerships, investing in key industries, and expanding its global footprint, China is positioning itself as a formidable economic power, one that is increasingly capable of challenging U.S. dominance. Section 5. Global Chain Reaction. The trade war between the United States and China is not a bilateral spat, it's a global shockwave. The repercussions are being felt far beyond the borders of these two economic giants. U.S. allies caught in the crossfire are facing their own set of challenges, and the global trading system, already strained, is being tested to its limits. Canada and Mexico, key U.S. trading partners and members of the USMCA trade agreement, have retaliated against U.S. tariffs with their own. These retaliatory tariffs target a range of American products, from farm goods like pork and whiskey to manufactured products like steel. This tit-for-tat exchange of tariffs has disrupted supply chains and increased costs for businesses on both sides of the border. Southeast Asian nations, many of which are tightly integrated into global supply chains that rely heavily on China and the United States, are also experiencing significant disruptions. The uncertainty surrounding the trade war, coupled with rising costs and the threat of further tariffs, has made it difficult for businesses to plan and invest. European nations, too, are feeling the pinch. The trade war has injected a dose of uncertainty into the global economy, making businesses hesitant to invest and consumers wary of spending. The transatlantic trade relationship, already strained by previous disputes, is facing renewed pressure. The trade war has exposed the interconnectedness of the global economy and the domino effect that protectionist policies can have. As tariffs escalate and trade barriers rise, the risk of a global economic slowdown becomes increasingly real. Section 6. The home front feels the pinch. The trade war's impact is not just an abstract concept confined to boardrooms and stock tickers, it's increasingly hitting home for ordinary Americans. Rising prices, a volatile stock market, and a general sense of economic uncertainty are becoming part of the daily reality for many. Consumers are feeling the pinch at the checkout counter. Tariffs on Chinese goods, ranging from electronics and appliances to clothing and footwear, have pushed up prices for a wide range of consumer products. While some businesses have absorbed a portion of the increased costs, many have passed them on to consumers in the form of higher prices. The stock market, a barometer of investor confidence, has been on a roller coaster ride since the trade war began. The uncertainty surrounding trade policy, coupled with fears of a global economic slowdown, has spooked investors and fueled market volatility. This volatility has eroded investor confidence and impacted retirement savings, particularly for those heavily invested in the stock market. Beyond the immediate economic impact, the trade war has created a sense of unease among many Americans. The uncertainty surrounding the future of the U.S.-China relationship, the potential for further escalation, and the long-term consequences for the global economy weigh heavily on people's minds. The trade war is a stark reminder that economic conflicts have real-world consequences, impacting not just businesses and governments but also the lives of ordinary people. Section 7. Playing the debt card. China, in a strategic move with potentially far-reaching consequences, has begun to leverage its position as a major holder of U.S. debt. China holds over $1 trillion worth of U.S. Treasury bonds, making it one of the largest foreign creditors to the United States. And in recent months, China has started to reduce its holdings of these bonds. While the amount of U.S. debt China has sold off so far is relatively small, the move has not gone unnoticed by economists and policymakers. The concern is that if China were to significantly accelerate its selling of U.S. debt, it could drive up U.S. borrowing costs, making it more expensive for the U.S. government to finance its budget deficit. Higher borrowing costs for the U.S. government could have a ripple effect throughout the economy. Interest rates on mortgages, car loans, and other forms of consumer credit could rise, putting a strain on household budgets. Businesses could also face higher borrowing costs, potentially impacting investment and hiring decisions. China's move to reduce its holdings of U.S. debt is a calculated tactic in the ongoing economic standoff. It's a reminder that China has levers it can pull to inflict economic pain on the U.S., and that the trade war has the potential to escalate beyond tariffs and trade barriers. Section 8. A New World Order? The trade war between the U.S. and China is about more than just tariffs and trade deficits. It represents a fundamental shift in the global balance of power. China's economic rise, coupled with its growing assertiveness on the world stage, is challenging the established order, one in which the U.S. has long been the dominant force. The trade war has exposed the limitations of U.S. economic dominance. China, with its vast manufacturing capacity, its control over critical resources like rare earth minerals, and its growing network of trade partners, is proving to be a formidable competitor. The days when the U.S. could dictate the terms of global trade are fading. The trade war has also accelerated the fragmentation of the global trading system. The rules-based order that has governed international trade for decades is under strain as countries increasingly resort to protectionist measures and bilateral agreements. This fragmentation creates uncertainty and undermines the stability of the global economy. We are witnessing the emergence of a multipolar world, one in which power is more diffuse and alliances are more fluid. China is positioning itself as a leader in this new order, offering an alternative to U.S.-led globalization. The question is whether this new order will be characterized by cooperation or competition, by shared prosperity or zero-sum rivalry. Section 9. The Uncertain Road Ahead. The trade war between the U.S. and China shows no signs of abating. Both sides seem entrenched in their positions, unwilling to back down. The economic and geopolitical stakes are simply too high. As the trade war drags on, the risks to the global economy grow, and the path ahead remains shrouded in uncertainty. One of the biggest concerns is that the trade war could escalate further. The U.S. could impose additional tariffs on Chinese goods, and China could retaliate in kind. The trade war could also spill over into other areas, such as investment restrictions, technology transfer, and currency manipulation. Such an escalation would be devastating for both economies, and would send shockwaves through the global financial system. Another concern is that the trade war could lead to a decoupling of the U.S. and Chinese economies. This decoupling would involve reducing trade and investment ties, as well as limiting technological collaboration. While such a decoupling might reduce economic interdependence in the short term, it would also come at a cost, disrupting supply chains, stifling innovation, and reducing consumer choice. The trade war has also damaged trust between the U.S. and China. Rebuilding that trust will be a long and difficult process, even if a trade deal is eventually reached. The trade war has exposed deep-seated economic and geopolitical tensions that are unlikely to disappear overnight. The world is watching anxiously as the trade war between the U.S. and China unfolds. The outcome of this conflict will have profound implications for the global economy and the future of the international order. Navigating the uncertain road ahead will require careful diplomacy, economic pragmatism, and a recognition that cooperation, not confrontation, is the only path to lasting prosperity.